Hello, everyone. Thanks for joining Options and Algos in the State of Play in the Crypto Market. First off, again, I'd like to thank everyone for joining. Also, SCB 10X, Kuntai, Kungift, and everyone, thanks for asking us to speak. Myself, as you can read, John Lagman, I'm the APAC Crypto and FX workflow, or some call us market and product specialist at Bloomberg. And I have the honor, I think it's like the fourth time, Darius, maybe, that we've been on a panel together. But
Probably
I'll let
more,
you,
probably more.
yeah, maybe more. I mean, we've known each other before then. So I'll let you introduce yourself and then we'll get right into it.
Thanks, John. My name is Darius. I'm the founder of QCP. We are a global crypto trading desk. Our aim is to be the trading partner for the next generation. I think we have a spot desk, rates desk, options desk. We are one of the largest market makers for derivatives globally. We were founded in 2017, so quite a old hand in the space. I think for us, it's been a very exciting couple of years, and looking forward to building infrastructure and the trading ecosystem in the digital asset space for the future.
Okay, great. So now before we even get into options and crypto algos and whatnot, I mean, obviously the biggest story for months now, I mean, even the end of last year, has been spot ETFs. For those who haven't been following it as much, and maybe, could you kind of give, what's been the implications, not just on BTC, but actually altcoins, maybe even, altcoins, meme coins, and the kind of overall infrastructure and stuff.
Yeah, no, absolutely. It's been the spot ETF, Bitcoin spot ETF in particular in the US has been a real game changer. I think even for us, we underestimated the impact of it because our thought previously was that there was already a futures ETF, and that the spot ETF wouldn't make that much of a difference. But I think the real difference is the players that entered the space behind the spot ETFs, BlackRock, Fidelity, and it's been a bit more of a paradigm shift rather than a game rather than a product shift, right? So the spot ETFs have resulted in a lot of additional participation from US players and global players. And I think one of the biggest adoption factors, or rather the reasons for adoption, is the fact that right now it's something that the banks can actually distribute and trade. So I think the conversations that we've been having, and it's been the wealth desks of banks coming to say that they were almost caught surprised because suddenly their clients are trading hundreds of millions of dollars of this BlackRock ETF, and they didn't expect this to happen. And I think the access, the publicity and the number of players that have been involved. I mean, recently, I think just last week, it was shown that guys like Millennium, Schoenfield, like Millennium has a $2 billion position in the spot ETF. I mean, it might be a basis trade against CME, but still, having such a large position validates not just the ETF, but validates the asset class. So I think that's been the biggest paradigm shift here, right? It's a validation almost of digital assets or crypto as an asset class, even though it's just Bitcoin.
Yeah.
So as to your answer, how has it affected stuff like meme coins, which are on the more speculative or less regulated end of the spectrum? I think just the fact that the space has been validated, infrastructure is being built up, guys, institutional players coming in. And again, last week, we had the headline that the Wisconsin State Pension Fund has a $100 million position in Bitcoin spot ETF as well. So what we have seen is overnight with the launch of the spot ETF, it's gone from people not sure whether there's institutional adoption to absolutely there's institutional adoption. And then the question is, how do we price, or rather, how much more institutional adoption do we get going forward? And I think the momentum is very strong, in that respect. So it's been a big game changer for the space, not just in the price. I think the price is the least of it. Just last night, I think if you saw rumors of the ETH spot ETF, Ethereum spot ETF, just rumors of it coming up has resulted in Ethereum spot price going from 3001 to 3007. It just tells you that it's not so much about the price, it's more about how the price reflects what's going to happen 5-10 years down the road,
Yeah.
where Bitcoin, Ethereum, and other crypto assets, gets treated as the same way equities are being treated. So I think that's a real game changer here.
Yeah. Now, one thing I heard you say near the start was like the growth of like wealth products and private banks, wealth firms looking into with the validation from the ETF, more and more players looking to basically have to service their clients. Now, one thing I've noticed, because I won't lie, I actually am on your Telegram chat where you guys have a lot. I always like your updates about the different. I always go back to the bottom where I see you guys have been really how do you say discussing a lot about like structured products, different ways, because it gives you a lot more flexibility subject to how you are looking at the market. Is it going up or, it will go up, but not yet. I mean, how, any kind of observations or how's the uptake been? Because like I said, for me, looking at it, it looks quite interesting.
No, so this is a really interesting thing because maybe I address your question in parts. Firstly, since the spot ETF, the conversations that we've been having, with banks are not the fringe banks. You're talking about the Morgan Stanleys, JP Morgans, Goldman Sachs. These kind of guys who suddenly have guys treating the ETF with their securities desk on the wealth side, but they don't have the usual suite of products that they offer their wealth clients. For FX, for commodities, for equities, they usually have a whole suite of structured products that they offer the wealth clients. But suddenly you have guys, the wealth guys trading hundreds of millions of this spot product, and they are trying to play catch up in terms of what can we offer them in terms of the usual equity linked notes, accumulators, that kind of thing. So I think there's this big gulf, and sort of we are trying to bridge the gap, right? So I think our play is to provide these wealth products, that are well known, and for us to innovate on new products as well. So crypto underlying, but product structure is very similar. Equity linked notes, accumulators, even simple stuff like just spot futures basis trading, which is a sort of a risk, zero downside kind of product. These are still very new in crypto, and going to be very new for banks. But I think, to me, in 5 years' time, you're going to see this all over the place, right? Anything that you can trade, any structured product or any derivative that you can trade on Apple stock right now, in 5 years' time, it will be offered on Bitcoin, Ethereum, maybe even Solana, and the rest of the coins down the spectrum. So it's almost like there's already a playbook in place. The where you have mainstream adoption, you also have these products being distributed. And it's useful for typical investors, because I mean these products are basically structured strategies. They sort of package what the opportunities the market offers. So I think it comes on almost like strategies that are ready made on a platter. So that's the play we are trying to do, trying to package these products. Opportunities that you can get returns on the interest rate curve, opportunities that you can get through vols and options. You're talking about a underlying in this case, which is typically the interest rate curve is above 10% risk free, and the vol base is around 70-80% compared to an FX, which is typically a single digit vol base, right? So the amount of products you can structure from this, and the creativity you can have in innovating products is immense. And I think for TradFi guys who are looking for a new asset class, with alpha, this is I would call it like pre-emerging market kind of flavor to it. Of course, there are risks, but with the Bitcoin spot ETF, I think it's becoming, Bitcoin crypto is coming into the mainframe in terms of being a very tradable asset class with liquidity, as well as a derivative infrastructure in place in order to put these pieces together.
I was actually curious of the actual end users of these or end buyers. Is it actually more TradFi or have the crypto natives been a bit slower to take up some of these structured products as maybe they keep just looking for directional alpha and stuff, or like what percent you think is
That's
like
a
versus crypto native?
that's a very interesting question. The typical pickup from this have been, more private wealth type clients, high net worth
Okay,
individuals.
yeah,
The irony is that the crypto native guys pick this up a bit slower, because of all the very speculative opportunities in the native space, right? You have
yeah, true,
you do a meme coin, you get 100x.
true,
You stake your stuff in some protocols, you get those.
yeah,
I mean, of course, there are a lot of risks around this and smart contract risks as well.
yeah,
But with that said, look, I mean, look, there's this narrative and theme going on now, which is a bit of a DeFi narrative, right? So if you look at a protocol like Ethena, it's DeFi in nature, but the underlying product is actually buying spot, selling futures or forwards on centralized exchanges.
yeah,
So that product is a very almost a TradFi type play, but distributed via DeFi, right? So, and then that's gotten like a couple of $1 billion in TVL. How do you categorize that? I think, to me, the answer to your question is that the worlds are sort of colliding. Like, it's going to be very hard to draw a clear boundary line between a C5 play, DeFi play, because they're trying to get mixed up. But the fundamentals of how you generate returns from crypto is not going to be too different from how you do it in TradFi, right? You have a forwards curve, you have a vol curve, you monetize it the same way.
yeah.
Crypto has some native elements to it. ETH has validator yield, and there's a whole class of native derivatives you can probably structure out of that. DeFi has a bit more of ways to get yield as well. But by and large, fundamentally speaking, I don't think we need to recreate the wheel here. Different underlying with some idiosyncratic or special unique elements, but the way you monetize the vols and the forwards is very similar.
No, you guys obviously are huge market makers. I mean, have you seen any kind of effect on the vol markets from the increase of the structured products and stuff? I mean,
No,
from
absolutely. So I think not so much the structured products per se, but firstly talking about the spot ETF, right? One
yeah,
of the biggest effects of having a spot ETF, and more specifically an American spot ETF, is that Bitcoin and crypto have almost effectively become a US asset, to some degree. And what do I mean by this? It's entered the macrosphere. So it's part of this whole risk on, risk off complex, right? Where S&P, it starts to correlate a bit more with S&P. And more interestingly, because crypto is one of the 24/7 liquid markets, right? We've seen evidence of it being a macro hedge on the weekends, right? So, when there was outbreak of war with the Israel-Palestinian conflict, you see that the first reaction was in Bitcoin, right? Because people are starting to use that as a proxy, for the US markets that's trading on the weekends. So there's impact in that in terms of correlation as well as the behavior. So like for example, a lot of volatility happens during US hours because that's when the spot ETFs are trading. So that impacts the vol market in that it used to be not so distinct, but now you have a US action dominating it. Examples like this, right? I think increasingly you see that as well, but that's by and large, a part of this market. I think one idiosyncratic thing also be, ahead of the when the ahead of the ETF listing, you see that the CME market started to anchor the rates curve as well, because a lot of the activity in the futures and forwards was being dominated by US guys.
I see.
So yeah, so a lot of idiosyncratic elements, and I would say particularly interesting for us is when they start to list spot ETF options, right? So you end up having a very segmentized market, which could yield a lot of opportunities, right? So let's say you look at crypto derivatives now, rather Bitcoin derivatives now, you have a native coin collateral market with guys like Deribit, Binance, Bybit, the others, native coin collateral. Then you have a native dollar collateral market, and then you have a regulated CME market, which is T+1, T+2 dollar collateral futures on CME, and then you have a cash spot ETF derivative. So you have four segments with all different curves. That should be very interesting for everyone.
So if I recall, like recently you guys opened your Dubai office. I was just thinking as you were talking, are you looking to deploy more assets to, as you said, the US type of time zone? I mean, obviously, as you mentioned, there's geopolitical risk, and with as you said, the spot ETFs made it where it's an American asset. I mean, are you looking to expand in that time zone, or are you just gonna make Simon Nursey trade 24 hours? No, this is
Good question. Firstly, we opened an Abu Dhabi office, so a bit of a distinction there.
Oh, sorry, I
Under
apologize.
ADGM. So yeah.
Yes.
So ADGM, I think it's a global. I mean, the intention there is to expand in the Middle East as well as globally. The regulator covers digital assets and capital markets. So I think the intention there is the fact that crypto is not going to be in the future, crypto is not going to be a distinct carve out from the capital markets. It's part of it, right? Especially if the ETF is bringing the two worlds together. So to have a derivatives business that is global, out of Abu Dhabi, and to be covered, it could be covered by anywhere, in Singapore, Abu Dhabi, London, US. But the most important thing is to be able to have capability to, or rather fungibility between physical ETF, vice versa, and to sort of make sure that we are able to straddle both worlds. I think that's the intention.
Before we go into the second part of, obviously we've been talking about options and the spot ETF. Anything else you want to talk about, like, whether it's a view for the second half or any interesting projects or things you see coming up in the ecosystem before we go to the second part, which is quite exciting news, I guess. Yeah.
I think the news is going to be still dominated by ETF news, right? So overnight, for example, ETF, whether that gets approved. My opinion is that it's a matter of time. I think a matter of time before Ethereum and all the other assets become, get listed in the US as ETFs. I think this is a bit of a geopolitical play probably as well, where, the US is bringing crypto assets onshore to be custody onshore, traded onshore. I think it's a clever move. But I think we see more of that happening. More and more institutional participation, whether it be hedge funds, pension funds, not just in the US but globally as well. So adoption will keep increasing. I think the banks get more in on it over time as well. In terms of their participation, I think that's very important too. But in the speculative side, or rather the native side of things, the very interesting part is how the DeFi and CeFi world are starting to collide as well. I think Ethena started this CDeFi narrative. I think that continues. I think that was always the key for scalability in DeFi. DeFi alone has a lot of disadvantages, but if you pair it with CeFi, I think that makes it very interesting and very scalable. Meme coins have been interesting as well. I think it's almost like it's almost like a sort of barbell approach to this, very institutional adoption through the ETFs. At the same time, culturally, meme coins have been taking off, as more of a cultural aspect of the space. So yeah, some of these interesting developments.
Yeah, I mean, I was just talking to someone today. I mean, you even have meme stocks, right? I mean, I think it's just a culture thing, as you said. Now, obviously, you're also embarking on a new venture, which is the other topic of this chat. Would you like to introduce to our audience, I guess, what you guys will be doing in the algo space, I guess? So, yeah.
Yeah, so QCP is it's a sell side firm, it's a trading desk. Again, we have a spot desk, rates desk, options desk, very similar to bank trading desk, for example, right? It's a sell side play. I think in the last year or so, we've been incubating our buy side capability, which is a fund management company called Primrose Capital Management. It's a sister company to QCP, a different company. The idea there is to, as the asset class becomes more mainstream, Primrose Capital is a fund management company that brings in a lot of the elements of quant systematic trading and applied on a crypto underlying. So in the last year or so, we've been building up a research platform. We have data scientists, quant guys, looking at which strategies in the quant market applies to this, again, pre-emerging asset class. And it's been very interesting, right? I mean, again, there are some idiosyncratic elements, but by and large, a lot of these strategies that work in TradFi work in crypto as well. So the Primrose comes with a bit of a barbell approach. Again, on one side of it, we have a research platform that looks at stat up, vol up, systematic directional strategies, very similar to a flavor of what you see in TradFi. On the other side, we're trying to do very institutionally native strategies, validator node running, airdrop farming, trying to make that scalable as well. So it's going to be a multi-strategy fund management company, and I think it's a unique offering because it's both very comprehensive in terms of the traditional market quant approach to the asset class, as well as some very native elements to it.
Will you be setting it up sort of as a, let's say, for want of a better term, like a Millennium style, kind of like pods, and then eventually if they scale up, you're looking to help them spin off and raise? Kind of
exactly. So I mean, interesting that you mentioned Millennium because the person who leads it, was from Millennium World Quant, so it's a very similar flavor. But yes, it's a separate fund management company, and we had a track record for about a year so far, so we'll be starting to raise external capital for it. It's been running on prop so far, but raise external capital for it and run it as a Millennium style multi-strategy fund management company.
Nice. I'm curious, since you said it's been over about a year, what's been the largest pain point in the setup? Were there certain things you didn't expect that, I mean, you're a veteran of entrepreneur. I'm sure you're expecting something unexpected, I guess.
So it's a very different setup from when we did QCP. QCP was like, okay, just asset class, start a desk, get a few traders, keep the ground running.
Yeah.
Immediately you can start, trading spot, trading options, and I think this setup required a bit more patience, because the infrastructure is very different. To set this up, like I mentioned, you need to hire data scientists, you need to hire quant guys, you need to get the infrastructure going. It needs to be a consolidated infrastructure. It can be piecemeal. You can't be building random pieces and opportunistically reacting to the market. It has to be a platform. There's a position management system, order management system. Research, a sort of a back testing system. So there's a body of work that's required. To have this set up. So that's taken some time. Required some patience from us as well. And it's still an ongoing project, right? These things you have to keep building and keep developing and adapting to the market as well. So that's probably been the biggest pain point, in terms of compared to the setup of QCP at the early days. It required a lot more, foundation building, so to speak, right? In QCP side, we sort of we hit the ground running, and then we've been building along the way, and that's taken a lot of effort as well. But in this one, for this one, there's a whole body of work required in terms of setting up a research platform.
Oh, wow. Given us the research setting it up and stuff, I was just curious. I mean, obviously, I'm not trying to shield Bloomberg, but we have a huge data business. Has the data? I mean, I was actually talking to someone about this. Free data is good, except if the quality for a high performance kind of algo, there's hiccups. I mean, have you found it's harder to get quality data? Maybe having come from TradFi originally, I mean, has it been very different in that sense?
Very different. Of course, the first team that the first set of people that we hired for this effort were actually data scientists. So you hit the nail on the head, right? Data quality from crypto and TradFi is quite different. Firstly, in crypto, you have a lot of native exchanges. They're all almost like multiple sources of truth. Whereas in TradFi, there tends to be a single source of truth and all verifiable. very centralized data, so to speak, whereas crypto tends to be a bit more decentralized.
Okay.
There are a lot of data plays, of course, for consolidating data. But I think for us, the first step actually was to get data scientists to bring all this decentralized data and to create a single source of truth, single source of price of price data in order to run all the models, right? So it is different, but at the same time, I think the processes and the methodologies that apply in TradFi are not too different as well. So different in nature, maybe a bit more work, but in the end, I think we're able to get that done.
I mean, for anyone potentially who's, I'm sure on your VC side, you always get people pitching things to you. I mean, for anyone who may be thinking of, they have their own algo, will you be focusing purely on your internal strategies, or do you think you'll be incubating any new teams or looking forward, or is that something 2025 or something?
No, we're always happy to have a chat with people with good ideas and good strategies. It is a multiple pod system, so we do incubate portfolio managers and different strategies as well. So always happy to have a chat for that.
Okay, well, I mean, I know we're almost up for time. Darius, any final thoughts on options, crypto algos, or anything you want to talk about? We got about 2 minutes.
No, absolutely. I think I've been in the space for 7 years, but it feels like a bit of a fresh start this year, especially with feel like a new paradigm, a new phase in the market with especially the spot ETFs. I mean, not just the fact that sort of the institutional guys are leading the charge, but the whole feel of the space feels a bit different, especially after the nuclear bomb of the last couple of years. I think it's been a fresh start, very encouraging. We're seeing new entrants. We're seeing like the incumbents also, picking things up, and I think that a lot of the worlds are colliding, right? Like I said, CFI, DeFi is colliding, Insti market, native markets are colliding. I think I think there's a lot of value in the creation of new enterprises, the creation of new ideas, on the fault lines between the different spaces. And that's where we want to operate as well. I think there's a lot of opportunity here in the emergence of a new asset class, emergence of new infrastructure, new markets. I think, even simple things like the creation of a new credit or rates market in crypto, I think that's one of the key elements for the space to grow. So, I think if you are coming to the space and you feel it's a bit late, I would disagree. I think, there's a lot of new things to be built and very exciting couple of years ahead.
Yeah. Thanks, Darius. I think, as always, a pleasure to talk to you. And I think thanks again, everyone. And stay tuned. Please stay on. There's a full day of more, I guess, sessions. And I think you'll be on again. Is it tomorrow? You're on another one.
I think Simon is taking me on the panel, but thanks, John, for your time.
Okay.
And,
all right.
Well, have a discussion.
Simon Nurse, he works for Darius, very smart guy. Definitely make sure you tune in. So thanks again. I think we're up for time. Yep.
Thank you.
Darius.